Today's one of my favorite shows of the year. It's Mad Money's annual Salute to Service, where we take time to honor all those who serve our country. To all active duty, reserve, and retired service members far and wide, past and present, we salute you and we thank you. You know I always love taking questions, and today I got a very special group here. Cadets from the Finance Club at the U.S. Military Academy at West Point. Now, they visited us here in our neck of the woods before many times and have graciously hosted us at West Point in the past. Boy, that was one of the greatest honors. Spend the day on their magnificent and storied campus. I got so much out of that, and I hope they did too. We're happy to have these people back. These guys are the best and the brightest, and they've got some burning questions. I say let's get right to it. Let's get right to it. Go ahead, sir.
Hey, Jim. Antonio Holland, Westminster, Maryland. My question for you is, NVIDIA's seen a rally of nearly 200% since its low point last year. What is your outlook on the future of this company, and what role does AI play?
Okay, it's fantastic. They are king of AI, and thank you for that question. I will tell you that NVIDIA is a stock I say own it, don't trade it. And that means that we're not going to even worry about the November 21 when they report. What we're thinking about is multi-year. And multi-year, they own this space. And the reason why they own it, not is because they're just the fastest, but because they burn the least. They're the least hot. So you get a bargain immediately. The answer is I see multi-year growth path for NVIDIA because they are the king of AI worldwide. Thank you.
Hey, Jim. Hey, Jim. Garrett Crispin from Bentonville, Arkansas here. With the current macroeconomic conditions and geopolitical uncertainty, where can we position our large cap investments for the future?
All right, now this is going to take you a little bit by surprise. So you're a younger fella, and that means I don't want you to think about any of that near-term stuff. I think you should be thinking about the greatness of our country, the greatness of our people, and invest in the people and the great companies that you see now that you think could be great in the future. We talked about NVIDIA just now. I like technology. I like medical devices. I like anything that's related to biosimilars, to anything in biotech. I want you to just think big and think long. You got your whole life ahead of you, but you know more than I do about the younger companies coming up, and that's what I want you to think about.
Thanks, Jim.
Hey, Jim. Cadet Trey Morris from Tampa, Florida. With so many strong companies in the defense industry, who would you choose?
Okay, we had Lockheed Martin on this week. I think they do a very good job. I think that, you know, I'm kind of... I don't understand why Northrop Grumman's so low, okay, or General Dynamics, because they're both very, very good companies. I think that the one that you might want to think about that is very speculative at this point is RTX, which is the old Raytheon, simply because they have a problem with the Pratt & Whitney, with their WAC. They have a problem with engines, which I think is completely reserved for. So my advice, speculative RTX and just bedrock would be Lockheed Martin. Thank you.
Thank you.
Hey, Jim. Jake Liptak from Greenville, South Carolina. I wanted to hear your opinion. When do you think interest rates are going down?
When are they going to go down?
Yes, sir.
I think they're going to stay here for a while. And the reason I say that is because the economy's pretty hot. And Jay Powell is a guy, the Fed chief, is someone who does not want inflation coming back. He will keep the short end high, so the long end will stay high, too. We do have a bit of a lucky break here. Next year, the Treasury's not going to issue a lot of 30-year paper. But don't expect interest rates to go down big anytime soon. That's all that gobbledygook you hear on TV.
Thanks, sir.
Thank you.
Hey, Jim. Cadet Cameron Lee from Rockland County, New York.
How are you?
How can investors manage risk from geopolitical, I guess, volatilities and regulatory changes?
Why don't I own some gold? I mean, gold's had a big run here, but nowhere near where I think it can be because, you know, we're only replacing about our gold by 1% a year. I think own some gold. I'm not going to tell you to own crypto all the way up here because it's had a very big move. I'm always surprised that people don't have 10% of their assets in gold. That's the way I want to hedge it, okay? I'm not going to hedge it with treasuries because treasuries right now could be overvalued versus if we have something really bad happen, then, you know, I would look at it. But right now, I just think I'm not saying anything's garden variety. It's a dangerous world. But gold is the hedge, not bonds. Thank you.
Hey, Jim. I'm Cadet AJ Pimentel from Charlotte, North Carolina. I'm wondering, should us retail investors be concerned about a potential government shutdown?
I was going to say you should be concerned about the Charlotte Panthers because they may be the most bereft of talent team. They have a great coach. No, I'll tell you, I've studied all the government shutdowns, and they're almost always buying opportunities, particularly. And the worst ones, the worse, the better. It sounds strange, but they do scare regular people out of the market, and that's where the opportunity is. I try to keep regular people in. Don't have them be trading, but they get worried, and that's your opportunity. Okay,
thank you,
bye.
Jim.
Hey, Jim. Cadet Aiden Bohm from Coxsackie, New York. My question is in the fixed income space.
Okay.
With rates where they are right now, do you think now is a time for retail investors to get in the bond market at a discount?
Okay, I think it's a great question. The only thing I'm recommending right now is be out only 3 years. Next year is going to be subdued because the Treasury's not going to issue a lot of paper, but that's longer end. But that's going to change in the year and the year after because we got this big deficit. So I'm not advising a lot of bonds because I am very concerned about the deficit. The government is profligate. the government spending way more than it has. And because of that, I'm not as big a fan of bonds as other people. It's just, if the government gets its act together, I'd love to buy bonds, but they are not together. Oh, geez. Well, I'm going to thank these amazing cadets for joining us here today, for your great questions, for your service. Too many questions about fixed income. We should be thinking about growth and thinking about younger companies in this great country. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.